folks, hope you're well. Just a quick little market update tonight based on something that I was talking to someone about at lunchtime today, and it fits in quite well with the market structure work that we've been looking at, particularly the multi timeframes and how you use the multi timeframes to try and identify where the market might be going. So this is DXY. We'll start on the daily as always, and if we look at the major structure and the ranges on the daily, we can see DXY daily is very much still bullish structure. I know there's been a bit of talk about this low here breaking this low here, but for me that's not a daily low, that's a 4 hourly low, so daily structure is still intact even though we see that low taken, and we're still very much in bullish posture. So daily bullish is the general takeaway from this. If we drop down to the H4 to see what the H4 is doing within that daily bullish structure, and stick on the H4 structures and trading range, and we can see H4 was bullish in line with the daily until the daily set its high, and then H4 breaks bearish. So daily bullish, H4 bearish means the daily is taking the retracement. So we're looking for points of interest on the daily for which that H4 bearish posture would change and signify potentially the end of the daily retracement. So we did get a little break here where the H4 high broke, but it's broken straight back, as you can see here, in a bearish posture again. So that here we can read as a liquidity grab above the H4 high. It could still end up being a failure swing on the daily, but we'd have to see daily range low broken for that. But ultimately H4 has returned, as you can see in this leg here, to bearish posture. Now in terms of the H4 range, this is the one we're looking at. It's this high to this low. This high wasn't a major high because it didn't close above this high, but it was the highest point between this high and this low being broken, so it becomes a major high at that point in time. So in a situation where daily is bullish and H4 is bearish again, so still looking for that daily retracement, and with H4 being impulsive in this leg, the leg down, we're then looking for the H4 to take a retracement. So we drop from H4 and H1, and we'll have a look at the structure on the H1. So we'll just zoom in a little bit on that. So we can see here, as you would expect, the H1 structure is bearish when the H4 is impulsing down. It takes the H4 low, so I'll just stick that H4 back on again so you can see that. So you can see here, this was the H4 major low, so this impulse down here was a point of interest in terms of the low being taken. So a higher time frame area of importance. H1 then breaks bearish again at that point, so we see now H1 breaks bullish at that point, so we see H1 breaking bullish, H4 bearish. So similarly to the daily, we've got H4 in bearish posture, H1 in bullish posture, signifies that the H4 is retracing. So we're then looking at the H4 range, which is this one, for points of interest within that range for where that retrace could go back to. So this fair value gap here is the initial point of interest within that range. It could go higher than that. There are other areas above of interest. There's another gap up there. There's order blocks, but this is the one that's the first one closest to price within the premium array. So that's the one that we look at. So as you can see here, there was this bullish impulse on H1. We see a high set here, and then it starts pulling back into this area. And again, there was a lot of talk this morning about this potentially rolling over from here. But the conversation that I was having with the guys on the Discord was that I expected this to impulse further. I didn't think it had retraced far enough yet for an H4 retracement, so I expected at least one more leg on H1. And if we drop to 15 minutes and have a look at how that looks on 15 minutes, you can see again how looking down the time frames can allow you to shape what that's looking like. So the 15-minute structure in this section is here. I'm going to switch that H4 range off so it's a bit easier to see. So we can see the 15-minute structure. You've got high, low, high, and then this low is broken here. So 15-minute structure has now broken bearish. So again, if we play that through, H1 is bullish because it's retracing the H4 bearish drive. M15 has broken bearish, which signifies the H1 is taking the retracement within that structure. And we can see that's what's happening here. So we're then looking for points of interest within the H1 range where the 15-minute may switch bullish again and complete that that next leg of the H1 bullish drive. So there was an order block here on the 4 hour bullish order block, which was one of the ones that are out. There was other ones higher up, but we didn't see any structure change on 15-minute as we were watching it go through these levels and through the OTR. So the H4 order block became an area of interest when we were around here. And the logic for this one is essentially we know the H4 is bearish and taking the retracement, and for the H4 to be retracing, the H1 has to be bullish. We have a point of interest in mind for that H4 retracement, which is into the premium of the H4 range. H1 hasn't quite reached that yet, but it's taken this deeper retracement. We expect that the trend will continue, because you always expect that the trend will continue. That's what happens more often than not, until we see structural break to confirm it doesn't, and that structural break would be this H1 low. If this H1 low was broken here, we would start looking for the H1 being back in confluence with H4 and potential shorts. But in this scenario, there wasn't much room below for that to happen, and our assumption still has to be it's going to be bullish still. We're going to see that bullish continuation within H1 as that H4 retrace continues to play out. And it starts to become interesting here on the 15-minute when we see it start to slow a little in momentum on the way into that range. And we see this trend line liquidity being built up, as well as these kind of lows take liquidity, low take liquidity, low take liquidity. So there's a pattern that, again, ICT talks about it a bit, and it's one that's I think something he took from elsewhere as well, based on something that I've seen him say, in terms of this kind of 3 drive pattern in here. Now there is more than 3 drives, but you could make that into your 1, 2, 3 drive pattern there. And then this final low here, which is a major low, we see that falls below the 830 candle. We are already bullish on the H1 or on the day. We expect this to go higher as the H4 continues to retrace. This drop below the 830 candle, which doesn't close, crucially, it only wicks below, which signifies to me anyway that that's a raid on liquidity. It then explodes in the other direction, breaks the 15-minute high, and continues through to the H1 range. It doesn't break the H1 range at this point in time. So again, the conversation was we may see this pull back in to this range before continuation on to eventually break the H1 range. And the area of interest that we were looking at on that was this one, and you can see it just worked straight back into the top of that. It's left these equal lows, or relatively equal lows here. So we could see this come back in here again, and there wasn't a trade in there for me because it didn't come deep enough. It didn't come below the 0.5, which is what I'd be looking for. But in terms of the structures and how we look at them and how we use the structures to gauge the direction, it's a really nice example of doing your work top down, looking at the structure on the daily, bullish, but in a retracement, which means the H4 should be bearish because it's in a daily retracement. That is the case, it's bearish. The H1 has flipped bullish, which signifies the H4 has taken the retracement. So we're looking for areas of interest within the premium range of the H4 range for H1 to reach for, and then within that H1 the M15 breaks bearish while the H1 is bullish, which signifies the H1 is taking the retracement, and then we're looking for areas of interest within the H1 range where we'll see the M15 break structure or shift in structure in order to head the opposite direction and target the H1 high. And that's what we see here. The H1 high is currently being targeted. And if we look at that just from an H1 level to try and make it make a bit more sense. I'll take this stuff off and just leave the H1 structure on. Where's that one? There. So this is the H1 range and the H1 structure. And in terms of the conversation we had in the multi timeframe structure the other day, if we consider this, the dark path here is H4 essentially, and the lighter path is H1. So during this leg, the H1 is in confluence. This is bearish structure within the H1 in confluence with the bearish structure on the H4. This high here breaks this high within H1, which flips the H1 bullish, and that signifies H4 is taking this retracement inside its range. So we're looking for areas inside this range between this high and this low. That's the H4 range. We're looking for areas in there that the lower time frame, in this case the H1, would pull back to. And that same logic applies within each of these legs in the H1. Within the H1 we'll see the same fractal on the M15, and within the M15 we'll see the same fractal on the M5. And we can build that from top to bottom to give us an idea of order flow and where the market is likely to reach for. So that was it, just a quick little update, because it was a really good example today that I was talking about in Discord with a few of the guys as we mapped it through. Hopefully it makes sense. Any questions or comments, as always, add them in the comments, and I'll get to them whenever I can. And enjoy the rest of your night. Until next time, stay safe. My tea's it. Gotta go.